Ladies and gentlemen, Cake and Yar, welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.6% there. On the S&P Nasdaq 0.5%. Semiconductors down. Seemingly all these sectors are up except biotech and emerging market. Bitcoin down. Gold, silver, miners are up. Dollar flat. Oil up. Treasury bond up. Looks like VIX is also up today. Let's stick with S&P 500 ETF. Spider 65-minute chart here. So this is where we closed yesterday. As you can see here, we actually saw that down gap this morning. What's interesting about this down gap is that we actually saw exactly same down gap on Friday morning. As you can see here on Friday. On Thursday, that's where we closed. We gapped down on Friday morning, and then we proceed continue to the downside the first hour. As you can see, and then market just thrusted to the upside. Exactly same format here. As you can see, we gapped down, and this is where we open right here. Thankfully for the buyers, you can see the micro-term moving average has now been successfully reprogrammed. Perfect. You can see the micro-term, we've been trading all around that micro-term moving average, and truth has come about when we do see that downturn. Can that micro-term, because we don't know if the micro-term is reliable or not. So when we actually gotten above the micro-term, is that aqua squiggly line there. As you can see, we made a move. We down gapped this morning. You can see right on there on the first hour, there's a micro term there. And then on the second hour, micro term was there. And on the third and fourth hour, micro term was there, supporting the buyers. So as you can see, that micro term, which has been acting as resistance the entire week last week, well, entire last couple weeks, as you can see here, it seems that the micro term is now supporting the buyers. So you can see that was the fourth hour and fifth hour and sixth hour. We did close on the red candle. Again, another interesting factor there. Again, the last hour, we got the red candle there on Thursday at close. We got the Friday last hour red candle at close, and Monday red candle close there. So should there be another down gap this morning, 4:30 or so, that should be the level. Could act as support. We got the micro term coming up here just underneath it, dealing with or coinciding with the long-term moving average. So as you can see, as I zoom out here, the long-term moving average coming all the way from right here. You can see back in September, that long-term moving average seemingly been acting as support here. But once it was lost right here on the 18th or so, we were never able to get above that long term, but this is the first time. This is the first time before this since this entire decline right here, since middle of September. This is the first time bulls were able to get above all the moving averages here, right? You can see long-term moving averages there. We got the mid-term moving average here. We got the short-term moving average there. And obviously, we just talked about the micro term that has been fully reprogrammed to support the buyers. So I think as long as we stay above some of these moving averages, we do want to give benefit of the doubt to the buyers. Buyers obviously eyeing on. And we also have to understand, though, we actually, there's two down gaps that bulls actually filled today. This is actually quite a bit of achievement, because in the past, when I say in the past, I mean in the last month or so, these down gap areas been really, giving a lot of problems for the buyers. As you can see right here, see this down gap? When that down gap wasn't fully filled, right? This was in early October. When that down gap was open around September 26th, bulls got up here. That down gap wasn't fully filled right here. Right, that wasn't fully filled. The down gap still remained, right? And that's when we saw another tankage for about a week or so. So not only bulls had to fill the down gap from this morning, which was filled on that third hour, they also had to fill this down gap going all the way back to September.
Yay! Hurrah! Hooray!
So bulls actually filled both down gaps in one day, and so just looking at that, we can kind of sense that bulls have so much more confidence. We haven't seen bulls like this in quite some time. So it seems like if we do see a downturn tomorrow, maybe another down gap or something like that, 430 is there, micro term is there, and obviously this level right here, this level must be protected if the bulls are serious about going after filling this down gap at 430 at 440. Well, let's check out that oscillator. As you can see, the oscillator has now entered the overbought zone here, right? You see that? And we haven't been in that level quite some time. So as you can see, for about a month or so, the oscillator has been really tamed, sort of in this box here. This is the first time the oscillator was able to kind of break free from it. We are above the overbought zone, but we're not at the extreme overbought here. And what we're doing right now, as you can see, that oscillator is just very much flattening here. So there is actually a room for one more up day. I'm looking at the oscillator. Obviously, just because there's a room, that doesn't mean the market must get up there. Should there be a follow through tomorrow, and if we do see a bullish sentiment in the first 2 hours of tomorrow morning, this oscillator is sure to hit that extreme overbought. We have a little bit of room left here until that oscillator have to reset. Keep in mind that oscillator, when it gets resetted in the past, it has not been kind to the buyers. Though we have a lot of these levels could act as support, but that oscillator, as you can see, is currently flattening out, and obviously that's not something we've seen. So bulls are adamant. We can see in the past, once we see that cross, market tanked. Once we see that cross, we saw that market rolling over. This is a time where it's seemingly, the oscillator getting into the overall zone, and the oscillator is adamant about rolling over because sentiment in the short to micro term has shifted. On the daily, this is a daily chart. On the daily, we do have the midterm moving average guarding this down gap right here. That's the midterm moving average, which did act as support about a month ago. We lost that midterm moving average with the down gap. And so this level here, 433, 435, is gonna be the resistance level. And it's tough to see on the 65-minute chart. It looked like it's a clear sailing until 435, but there is this midterm moving average around 433.81, as you can see on my chart right here. That's 433.81 on Spider. This bullish divergence that we have on the daily oscillator. So we just talked about 65-minute chart overbought sentiment, or at least we've entered in the overbought zone on the 65-minute chart. But looking at the daily, that oscillator is very fresh. We just coming off of extreme oversold level. This is an extreme oversold sentiment we haven't seen since last year, the October of 2022. America, fuck yeah! Coming again to save the motherfucking day, yeah! We're coming off of extreme oversold on the daily with the bullish divergence, right? Bullish divergence meaning we have lower low on the price action. We got a very smooth and subtle higher low there, as you can see. On the oscillator never put in that lower low. Should there be any kind of shenanigans, bulls do need to make sure these moving averages stay and protected and work as new support, because if all the moving averages are lost, if there's a shenanigan or something like that, which is very much possible in this market, then things can change. The sentiment can change quickly. But that bullish divergence, I think as long as that is viable, I think the bulls have a great chance bringing it back up and developing new trend here. Well, best way to support my work here is to sign up in one of my services. I just posted this for my members here. This is for my mini members for Traders Club here. This was just over the weekend last Friday, talking about this bullish divergence that's similar, very similar to what we witnessed in the October and March, and we're starting to see this. Is it a legit divergence though, or is this going to be some sort of a fake out? Right? We talked about that. We discussed this. Also, there's a full membership. Talked about this for my VIP and premium members. This weekly chart that everyone missed, this chart that you're not going to see anywhere else. And then obviously this is also for my full membership. This was special update on all the trying to understand this primary trend and trajectory of where we're going. Well, I'm going to come back for you. We'll reassess the situation. Enjoy your evening. Go train tomorrow.